Hi everyone, Darren at Leviathan Financial Management. Before we start talking about the stock market, we're going to focus on some of the earnings that we have coming up next week. Specifically, the two I'm looking at today are AMD and Apple. And we'll start with Apple. If you look at the chart here and the overall trend in the market, I do fancy a retest of that trend line that started back in 2020. We should take Apple down to around 150 area. Running it through Big Boy in its various iterations. I was looking at about 47 days out from now as my target time frame, and we do like one particular trade, a 140, 150, 160 put fly, as you can see, which is the top of the ranking list of trades there. There are your Greeks. We're looking at a 470% return on this particular trade, which isn't bad. Here is your heat map. Some people look at it, call it an option visualizer. You can see here where this trade is going to perform for you and how it's going to perform best. As you can see, if you do target that 150 area going forward in time will do best, but it's still going to monetize pretty well on an immediate downturn if the numbers come in weaker than expected next week. As you can see here, this is what's called a skew chart, which will show you what the entire volatility curve is looking like currently, where it was a week ago, and I believe there are 2 months settle as well. So as you can see, volatility is quite high at the moment, not surprisingly, going into earnings next week, but also just with the market in general, with fear about what's going on there. Here is ranking everything that is cheap and expensive. As what happens normally in any volatility curve, as vol goes up, the outer wings come down relative to that at the money. Taking all that into account and risk reward, that was the 140, 50, 60 fly is a trade that we like. And just going back there, as you can see, you want to be able to get in and around $1.18 including costs. That is a trade that you should be looking to do to protect yourself from the downside there. Next up, and a similar price action there, is AMD. Again, with the market trend being where it is, I fancy this to have a test to the downside. In this instance, I'm going a lot shorter term, just focus 10 days out from now, so just after the earnings are released, and I'm targeting around that trend line support, which is 185.62, and I want to make money around that area. And are there still trades to do? Yes, there are. Again, I like protective trades, which is why I've limited it down to flies. I don't want to be blown out one way or another. I want to know what my risk is. And entering this particular fly, which is the 81, 85, 89 put fly at 61 cents, if we're right, is going to monetize very quickly. And you will be looking again to make 4 or 5 times your money on this trade. Volatility is very high in AMD, as you can see here, compared to where it has been recently. Again, this will take advantage of that, whilst also giving you a level of protection, which is what it's all about. So again, here we'll just briefly go back on a trade that we liked previously and look at the stock market in general. We are very, very close to the final kind of support the way the market is trading at the moment. Any move lower here could see us retest the year lows around that 3,600 area. Rerunning Big Boy with the current parameters and market volatilities, it still likes put spreads, and specifically the 36.75, 37.10 put spread that you'd be getting in at around 243. It's pretty good trade as far as risk reward goes, and looks great on a downside trade, as you can see here. You know, things are not looking great for the stock market with longer term rates going higher. If this holds it's a simple case of where would you rather park your money, in somewhere that's safe that you can collect 6%, or in equity where you're hoping on forward earnings being better than expected. As you can see here, this is a skew shape as well. Unusually in this instance, when vol goes up, the skew flattens, but in this case it's not. Those small puts are still bid, so buying put spreads is something that is relatively cheap and worth looking at. On other point of note, we have the non-farm payrolls at the end of the week. That will be the focus, and the US employment data will give a further inkling as to the health of the economy and whether or not the Fed will have to raise rates further, which will also put more pressure on the stock market. Anyway, that's all from me. Good luck trading and have a great weekend.